Market day, of course, Big Jobs Friday. Emily, you were covering that for us this morning. Want to show the market action we're seeing first right now. Of course, green across the board. The Dow up by about 230 points. Right now, the S&P up by about 26. The NASDAQ up close to 1%. And a lot of the market action we saw kicked off with that jobs report this morning. 136,000 jobs were added last month, missing economist estimates of 145,000. The unemployment rate, though, importantly, fell to a 50-year low at 3.5%. And joining us now to discuss is American Action Forum's Fiscal Policy Director, Gordon Gray. Gordon, just want to get your initial thoughts to the job number. Obviously, as we just said, a little bit lighter than expected, but the unemployment rate unexpectedly dropping.
Sure. So first, thanks so much for having me on. And my general view on the employment report today was it was good, but not great. Like you said, the top line jobs numbers disappointed a little bit from expectations, but you're right. That unemployment rate paired with a net increase in the labor force, that's a solid number, I think. So 3.5%, 50-year low, that's strong. I'm concerned about some of the sectors that are shedding jobs, manufacturing, for example. And I'm a little concerned, and hopefully it's just a one-month aberration, I'm a little concerned at flat earnings. So it's a mixed bag, good but not great.
Yeah.
And Gordon, where do you think we actually go from here? Because some of the things that analysts have been saying is that this might be the best that we get going forward. Some of the concerns over the U.S.-China trade war, the impact that the UAW strikes might have on non-farm payrolls going forward. What's next?
Right. So first of all, you're right. The GM strike didn't show up in this month's report. I'm certainly concerned about first just the global growth environment. You know, the U.S. is a large domestic economy, but it's part of the global economy. So when global growth slows, that's a problem for us. Obviously, we also have some self-inflicted wounds, in my view, with respect to our trade policy. That's a problem. I think we're seeing that in the manufacturing sector. But for the most part, you know, the American consumer, 70% of the U.S. economy, is still going strong with unemployment at 3.5%. You know, when Americans have good jobs, and in general over the last year, we've seen a nice uptick in earnings growth. So when that's strong, then Americans will still spend, and that'll keep the economy, I think, pretty healthy for at least the near and medium term.
And on net, do you think this jobs report makes the case or weakens the case for another Fed rate cut at the end of the month?
Right. So in my view, I don't think today's jobs report really changes the conventional wisdom on that one way or another. I think most people are expecting a rate cut this month, and I don't think that this report really alters that calculus.
Well, I mean, you mentioned weakness in the manufacturing sector. That certainly stood out. But also, we can't overlook the fact that the retail sector also got shellacked when you look at job changes there. The retail sector lost over 11,000 jobs. And, of course, retail is always a big focus for investors. What do you think about that? Because that's kind of been a constant theme, as has the flip side, health services seeing a lot of job growth.
Yeah, so I think this was, the 8th month of job losses in that sector. It's not entirely clear that there isn't some compositional element to this, that where we're seeing some losses in traditional retail, that those folks aren't showing up elsewhere think of back of the house, like tech support for online retailers, distribution, and other elements of kind of the digital retail economy. It's not entirely clear that we're not seeing net gains from retail generally. They're just not being counted in the BLS data series as within the retail sector. That could be part of it, but you're right. I mean, we've certainly seen bankruptcies in major retailers. That's a concern, of course. Yeah,
so I mean, the good, not great sentiment that I'm hearing from you, you wouldn't know it if you asked the president about the jobs report. I'm not sure if you saw his tweet earlier this morning, but we'll show that to you. He said, breaking news, unemployment rate at 3.5% drops to a 50-year low. Wow, America. Let's impeach your president, even though he did nothing wrong! Exclamation point. Gordon, when we look at it, I mean, obviously he's going to be biased towards highlighting the good here, and you've highlighted both the good and the bad. But when we look at it, what do we think about the way that the trade war continues to hang over some of these economic updates that we're getting here? Because he's blamed the Fed, but we've also focused on the tariff side here. So how do you weigh both of those things in terms of the slowdown that we're seeing?
So, I mean, in my view, and the administration just hasn't really leveled with the American people on this, is that their trade policy is harmful to the U.S. economy. The argument presumably would be, okay, we're going to do tariffs, which Americans pay, but the argument should be, well, maybe this is worth some strategic objective as it relates to China and other trading partners. They haven't made that case. So from where I sit, it just looks like a trade policy that is harmful to the U.S. economy without much of a strategic payoff. So I think it's a net negative for the economy.
And right now, we're at least seeing at least some impact of that when we look at kind of things slowing down for now. But Gordon Gray, I want to thank you for taking your time. Appreciate it.
Thanks so much.